If you already know how to trade, but you still lose money, this is exactly where it's happening. It's not your it's not your strategies or your entries, it's what you're doing in the in between. So I'm not here to call out any specific trades. I'm here to sit here and walk through how to think in real time using the execution loop. Most of this is going to be me not trading, and that is the point. So let's just look at what's exactly happening right now. The first thing is, what is price actually doing? The real answer is that it's not really doing anything. I marked some prominent resistance and support zones just so you can have a context of what price has been doing right now. This is QQQ in comparison to what it's been doing in the previous. And so, what is price doing? Is it moving fast? Is it moving slow? Or is nothing happening at all? Literally, nothing's happening at all. The reason why we can say that is because number one, for price to be defined as moving slow, the direction has to be solidified. And right now, we have had, according to our candles, we have had actually an uptrend candle followed by two very weak candles, and our current candle is still resulting in some green movement as it fluctuates up and down, which means that price is legitimately doing nothing. So if price is doing nothing, this is literally where most day traders are going to lose money because they see this. They see the movement staying here at 633, which you can see the price here on the right side in the black box here. Price is not doing anything, and they still take a trade when there's no movement and there's no trade. So you're not losing because you're just wrong, flat out wrong. What's actually happening is you're losing because you're trading when there's no trades existing. There is nothing that exists right now. There's nothing tradable. So the second thing is the move that we wanted to take already happening? We just said that there's no movement, it's not moving fast or slow, which means there's nothing to take. So you have to ask yourself, okay, well, if it was moving, am I trying to catch something before it starts? Right? We just saw it turn a little bit down. Okay, our previous here at 664 is a previous resistance. We saw uh too strong-ish compared to the movements itself, too strong-ish downturn candles, and then we had this stopping candle right at our close to our support, but really not at it at all. And now we're seeing a little bit of a push with that red again, right? So you can say, okay, this might keep going down, but you still have to ask yourself, am I trying to catch something early? If you were to enter here, you would still be trying to catch something early. Now, what if this support continues being a support? Then you would be out. You'd be out of money, right? You would end up losing money. Not because you don't know what you're doing, but simply because you're trying to get in before anything happens. Now, this is where people say, oh, it might move. Oh, it might. Oh, there is like biggest previous move was a downturn, which means that I should get in for a downturn because that's going to be the next thing that happens. That's not specifically true, right? Just because the last movement was this rejection over like 132, like more than an hour. It was more than an hour of just hitting this wall. And then we had a nice down trail, which I made money off of. And then you're like, oh, it's gonna keep going. That's not necessarily, it could, right? But it's not necessarily going to be what's going to happen. And so when you say, oh, it might move, that's actually not a real condition. That is just a guess. That is just a educated guess based on you being experienced. If we look down here at our volume, buy and sell bars, we can see that right now our bar is super tiny, which indicates little to no movement on either side. And it represents not a lot of participants, but also we're not having a lot of movement in general. So the next question is, if it is going to start moving, am I going to enter during the move? Because that's where you make your money. You do not make your money from calling the bottom or calling the top of a move. You make your money by being in the correct direction at the right speed at the right time. And you're taking a piece of the movement. You're not actually going to be entering after it or before it. You're actually entering during it. And so, otherwise, if you're not entering during a move and it's already happening, then you're chasing it or you're just trying to guess before it happens. Now, this can be kind of confusing because you're like, well, if it's already happening, aren't I going to miss it anyways? That's not necessarily true. That just means the move was either too slow or too fast to catch it in the first place. There are always moves that are way too quick for you to catch. Even if you're a scalper, they're just way too quick for the human eye to even capture. Your average trade might be 10, 20, 30 seconds or 60 seconds. These trades I'm referring to are 3, 4, 5 seconds, right? Doesn't matter how fast you are or how fast your hotkeys are, you're likely not going to be able to get out of those trades. So if you see something pushing up or something changing or something moving, doesn't mean you need to get into it. Because if you're still entering, trying to chase it by trying to enter after, you're still going to get flipped out of a trade even if you were correct trying to get in. So if you're chasing a trade, you're too late. These are the trades where you get in, and as soon as you get in, it feels like it turns right around. You're like, oh my gosh, every time I get in, it's just turning right back around. It's not necessarily that the market, doesn't like you or anything like that. It's that you're getting in too late because you're trying to chase a move that has already happened because you think it's going to keep going. But we don't get to choose how long something plays out. We only get to choose how much of it we want to play, how much of it we want to take, what piece of this do I want. And so if it's too short lived, we can't get any of it, but you might still be trying to get a piece of it. And that is why it's called chasing, because by the time you get in, it flips back around or it changes direction, and now you're out of luck because the stocks are constantly going between fast and slow and fast and slow and fast and slow and up and down and up and down and up and down, constantly in different combinations. And then if you're guessing, trying to get in, then you're too early, right? We see price right now treating this 662 as a support-ish, right? We've kind of leveled out here. We're still about 30 cents away. So I would not treat this as it activated my 622 at all, right? Price could still come back and hit this and then go back up. So I would not treat this as activated, but let's just say, okay, we do see this strong candle. That's an indicator that we might keep going up. Does it actually matter if we're guessing, considering the market's literally not moving and we have little to no participants? Now, if this starts to pick up and it starts to break above our previous high, then we're like, okay, it's bringing in some speed and might actually move enough for me to take a move within this speed change. Then we're actually playing into the move. We're not guessing early. If you were to enter here, because now we've had two strong candles, there's nothing that's stopping this candle from going back red and hitting here or going lower. Nothing. Especially because if you were to see, let's just say price does come back down, you would be like, oh my gosh, I knew it was going to do that. Because you could say, oh, it's hitting this resistance. It did a small pullback. It never reached, my previous high and it came back down. You would say that to yourself, right? So if you can say those things to yourself before it plays out, then you probably don't have as strong conviction as you think that you do in order to take a certain trade. Right now, yes, it did come up and it looked like it was going to keep pushing, but guess what? The candle actually shrunk the opposite way. We're on the 5 minute right now. So if you're a scalper, there's really nothing here for you. But if you're a swinger, there's still pretty much nothing here for you because you still have to be correct on the amount of time it's going to take to play out something in your favor. So even if you do enter, and even if it does work, you still need to ask yourself some other questions about your positioning. Is your size too big? What if it does lose? What if it does turn around? Was your sizing too big or too small? Or not too small, but was it too big? Were you putting too much on it? Were you putting too much weight on your trade for you to feel like you were able to make money in a emotionally regulated way? Because what happens is that you might have $1,000 in your account, you put the full 1,000, guessing it's going to keep going up. Well, guess what? It did. Right now it's going up. But because your size is too big, your behavior is now going to change as well, which means that when you are trying to get out, how are you going to detect when you're going to get out? Because you really didn't have a reason for getting in, because you guessed. And then you're going to ask yourself, even if this did work, this is questions you ask yourself before you get in. You're also going to ask yourself, would I hesitate here? If I were to get in with calls and it starts to come back down, would I hesitate and get out because I feel like it's going to keep going down? Or would I be confident enough with enough conviction that it would keep going? Because I'm not here to teach you how to trade or teach you, oh, you need to only read charts the way that I read them. At the end of the day, I can't do that because I am myself and there's only one person who can read the chart for you. All right? If like I can't basically read the chart on your behalf. So if we keep, watching this, and we're like, okay, it's gonna keep trailing up. Now we see our candles are actually picking up speed. So now we go back to step number one. We don't keep going. We go back to number one. Number one, what is price doing right now? Is it moving fast? Is it moving slow? Is there nothing happening? We're actually getting a lot of speed right now. All right. So what that means is that if nothing's happening, again, this is where most people are going to lose money because they're going to see, oh, it's moving. I'm going to take a trade. Oh, there's no movement here. I'm still going to take a trade. Right now, we're actually getting a bit of movement. So we can say, okay, the stocks are moving fast. QQQ is moving a bit fast. But now we keep going to the next question. Is the move I want already happening? The answer is no, which means there's still no trade. Because what personally I would want to see is us go above this 664 because all this tells me right now is price might come here to our next resistance, but we're still gonna have to have enough energy to break it. Now, let's say that this current candle at 320 um decides to push all the way up here in the next 30 seconds. Would I have, like, it pushes up in 5 seconds and it comes back down within 30 seconds? Would I have been able to catch that? Probably not. So, yes, volatility has a tendency to break very quickly, but there's also even more trades that have the tendency to break with enough time to actually trade them. So, again, not like, yes, our first answer is yes, it's actually moving, it's moving fast. But now our answer has actually changed. In the past minute and almost 20 seconds, minute and 10 seconds, the market has not moved at all. But now it is. So when the market's taking pauses and is stalling and is pausing and is stalling, you have to keep those things in account as well. Not because um not because you're not allowed to trade anything, but it's because you only make money when the market's moving. So every time the market stops going your direction, you go back to the top of the questions. Okay, is it moving fast or is it moving slow? It's literally moving slow, consolidating itself um right here where the rest of these small little candles have stopped, as you can see. So what really would be the main purpose of trying to get in right now? There would be no purpose. Now, if you looked at this chart, you were like, oh my gosh, I was already in my trade and price started going back down, right? Now you would be holding this trade, hoping that it goes back in your direction when you're literally holding it in a downturn. You see how when you don't exit properly, I mean, when you don't enter properly, it's very hard to exit because now you wouldn't be able to ask yourself the right questions, especially if you entered too big. You would be hesitating. And then when it turns back around like it is now, you'd be an emotional whiplash. Like, okay, now it's going back up. So I want you to pay attention to what I'm saying. Everything is different for scalpers versus swingers. There's people that trade fast movements, people that trade slow movements. But at the end of the day, the market doesn't care which one you are. The market's going to do whatever it wants to do. So you don't get to just jump in because you feel like you know what's going to happen. You have to be able to play during the move. So we go back to the top. Is it moving fast or is it moving slow? Well, now it's moving in a completely different direction. So right now it's not doing anything. Because if you entered calls right here, I would seriously, not judgmentally, but I would seriously say, like, hey, why did we enter calls if the candle is literally red? It's clearly not going in our direction unless you were willing to take some puts here. And not really sure why you'd be taking puts here. So when you start to guess to yourself and you're like, oh, this trade is going to go, let me just take one trade, those are the thoughts where the mistakes start to happen. And you have to ask yourself, be honest with yourself, when you break these rules, are you willing to say, I'm done? Or are you trying to jump back in with more? Because if you don't fix the mistakes now, all you're going to do, like with behavior, if you don't fix them with behavior and execution, all you're going to do is try to fix them with more trades. And that's how accounts literally get blown. Because as you can see, this candle is still red, and we cannot say if it's going to go up or down. We can't say that right now because we don't have any movement to tell us what it's going to do. So if you're watching this and you're realizing that this is exactly what you do when you're trading, I already broke down this whole system step by step in the free private training. The whole system is there. It's linked in the description box. Watch that video once and then come back to this video and you'll see it a lot clearer and exactly what I'm saying. Because if you convince yourself that something is literally here in these trades, you're gonna end up making a lot of mistakes. So you go right back to the loop, right back to the execution loop at the top. What is price doing right now? Is it moving fast or is it moving slow? Is it moving up or is it moving down? And every time it changes speed or direction, you have to make sure that you're taking note of it. What happens way too often is that the trades actually change direction, they actually change speed, they actually change their purpose. And then you are already like, well, I'm supposed to be taking calls because 20 minutes ago I decided I was going to take calls. But it's not about what you decided, it's about what's currently happening in the market so that you can align yourself with what's happening. Because I can guarantee you that most of the time you're in the right direction, but you might be at the wrong speed, or you might be at the right speed in the wrong direction because you are trying to jump in too early or too late into trades. Or even worse, you're trading when nothing's happening. So if you're a swinger and you're looking at this right now, you might say, hey, yeah, price is actually trailing up. It took a little break here, bounced up, take a little break again. It's likely to go back up, right? You are in a totally different mindset than swingers because swingers don't have the ability and the luxury. I mean, scalpers don't have the ability to hold and hope that trades turn around in their favor. But you as a swinger, you take on actually swingers take on a lot more risk than scalpers because you actually have a longer time horizon. So you have to look at this differently. Okay, what you're actually looking for is price still moving slowly in my direction. If your decision was to be up here at 665, to get out here at 665, then the current candle is still holding under a previous resistance. We did have these two strong candles, but what is actually going to keep you in this trade? Would you actually feel convicted to still stay within this trade is the question. Because if you are going to stay within this trade, you have to be okay with how much you've put on the line, which is again why I say when you're practicing the execution loop, you have to trade with a certain size. You have to pay attention to the one rule, one size, one style, one ticker. It's not for restrictive purposes. It's literally so that you can be able to build execution in real time. Because this is completely something untradeable right now. Even if you were, even though price is moving slow, it's not even moving in one direction. See here, price was moving slow, like between here. Can you see that? Between here and here, price was moving, let's just say that's 661 up to 664, that's $3. It went very slowly and it went very, very roughly, but it still went. And I don't see any reason why it couldn't take another pit stop here and keep going. But you have to have your own personal convictions, and I cannot be convicted for you because I cannot trade for you and I can't make decisions for you if you're going to be doing your swinging. And if you enter a trade and you have to wait for it to start to give you profit, you're definitely too early. And you have to ask yourself, before I get in, am I chasing it or am I guessing? If you're chasing it, you're too late. Sometimes trades are just too quick. You can see a double bottom on a 1 minute chart, a double bottom on a 5 minute, on a 15 minute, on a 45 minute, on a 1 day, on a 1 year. You can see any market structure on any time frame. But trades that are on the 1 year that took to play out a double bottom are going to be a lot bigger moves than if you were to try to trade that same thing on a 1 minute chart. So it's all about not being too late or too early and trading things that have enough time for you to get in. So you have to be following the one rule: one ticker, one style, like one trading style, and one size that you follow. So if you're watching me talk live through this execution session and you're like, okay, this is what I've been doing wrong, and you're realizing this is exactly what you've been doing. I did already break it down, the whole system, step by step in the free private training. It's linked in the description box. Watch that video once and then come back and you're going to see this a lot clearer. Now, people who scalp, they have different reasons for getting into trades than people who swing. Because when you're scalping, you're looking for strong, volatile moves in one direction. And if you're swinging, you can actually take a little bit more of that uncertainty in direction and a lot of that noise that happens on that you can see directly in lower time frames. Even though you're using a higher time frame to trade, if you're swinging, you can still see those moments on the 1 minute or 5 minute or 15 minute. But you have to either way, if you're going to be swinging or scalping, you have to run back up to the top of the execution loop, which is what is price doing right now? Right now, price just showed us that it wants to have a small little pause, not a complete pullback, but it's giving us a small confirmation, a little bit of certainty that we might want to come back up to the resistance at some point and go back up. Now, if you were to try to go back up to the top of the execution loop, we would say, okay, price is not moving quickly, but it's still confirming, it wants to kind of trail itself up. So you know what? I might get into a swing here. And I'm going to hold it for XYZ days until it gets to XYZ dollars. But this is where most people still lose money because they'll see this as a scalper and they'll still take the trade when price is literally moving in the way of the swinger. Now for some preface, the market has 30 minutes left in it. When market has 30 minutes left, that means that a lot of expirations are coming to a close for the day, especially on stocks like QQQ, where they expire every single day. Not every stock has expiries every day. And then there are third Friday of every month where stocks expire all at the same time. But the reason that you're losing is not because of that. And it's also not because you're really trading wrong. You might just be losing because you're trading when nothing exists. So you have to ask yourself again, what is price doing right now? Is it moving fast or slow? Is nothing actually happening? For a swinger, they'll be like, actually, nothing is kind of happening at all. I can't really tell what's going to happen. For a scalper, you can be like, okay, I see these candles starting to be a little bit strong, but it really feels like they're just sitting in the same zone between 633 and 664. I mean 663 and 664. That's only $1.20. Actually, it's a little bit more than that. Actually, it's a little bit less. It's like 80 cents. But regardless, it's a zone that's close to $1, which is normal for QQQ. But it's important that when you see there's no movement, that you understand that there is no trade. Every dollar that you risk to the market when you don't actually see a definitive movement is literally just gambling. Because trading is based on skill, waiting, on patience, on rules, on strategy, on market structure, on analysis. And so if you don't see any of those things aligning for you and your personal conviction, that is literally just gambling. So you have to ask yourself, is the move already happening? If it's not, there's still no move, even if it looks like one is building up. Because you don't get to choose when it happens. The market could literally do exactly what it's been doing for the past 3 15-minute candles and just do that all the way here. Just do it all the way across and then, in 30 minutes when the market is closing at 4 p.m. Eastern Standard Time, it just goes up here $40, right? It could do that. It could literally do that. There's nothing you can do to make or stop the market from doing what it wants to do. But what's most important is that you take moves that are already happening. You have to ask yourself, am I trying to catch something before it starts? Because guess what? Every time you try to catch something before it starts, that is where people say things like, oh, the market might move, or oh, like, I got to enter early, or whatever. Those are not actual market conditions. Those are just a guess. And when the market's actually moving, you won't have to guess. It'll be very, very obvious. I love the uptrend potential of this, especially once it breaks this resistance. But does that mean that I'm still going to take a trade here? No, because I don't actually know what's going to happen. There's no way for you to know until you've already seen it. So you have to have your own list of personal convictions. Hey, yep, I feel like pressure is building up and volatility is about to come in. Or, hey, yeah, these candles show me that they're going up in the proper, in my desired direction, and they're going up at one speed, and I'm noticing that I like the way that it's going. Right? You have to be able to discern those things. You have to be able to, because guess what? The market can do whatever it wants to do. And especially if you're doing options, your expiration date is the main thing that will take your profit away from you. Once you know what you're doing, your expiration date is probably going to take a lot of money away from you if you don't play correctly. So if you do buy a contract and then you're guessing, you're actually hedging against yourself, which means basically you're putting the play that you're trying to make money from, you're really putting the play on yourself. because you already know that you don't have a lot of time before time decay starts to eat your trade or eat your profits. And then you're still letting yourself say, oh, it's okay to wait for my profit to start coming in my trade. That's not necessarily the position you want to be in, because as we can see here, we actually did have a nice reversal. Now, what if you had just waited and this candle comes down to 662 and then it fills this dollar here? You're actually going to make more money off just waiting than guessing. You have to get in the habit and build. Actually, it's a muscle to build. You have to build a habit of saying, hey, when I wait, I actually get the best moves. My opportunity capital, which is basically your account size, actually does get maximized. It only gets maximized when you wait. See, most people think that it gets maximized when you jump into everything, but you lose more money that way. So every time you're trading, you go back up to the top. Okay, what is price doing right now? It's moving really fast down. That was literally the opposite story 15 minutes ago. It was moving fast up. Now we're doing the opposite. So this is why it's so important to keep revisiting the purpose and saying, hey, what is it doing? What is it doing? What is it doing right now? Not what is it doing 15 minutes ago, and not what is it doing 5 minutes ago. What is it doing on the current candle? Because it can constantly change. As you can see now, it's now shrinking back up. So if you would have been like, dang, that's a strong candle, let me get in for puts. And maybe take down into the 662, and you want to treat it like a double bottom. Well, you don't get to do that. You don't get to do that because you don't get to call when the stocks do what they want to do. So you go back and ask yourself, it's a loop. It's literally a loop. And then once you get out of the execution loop and you learn how to make money in this loop, then you'll enter a different loop. But if you're watching this and you're like, this is literally exactly what I do all the time. This is the whole system, the whole thing I'm going through, all these questions, all the execution that I'm going through in this session is broken down step by step in the free private training. Watch that video and then come back and watch this whole clip of me talking through this execution. It's going to make a lot of sense. So right now, price has literally squeezed its previous movement, even though that was a really strong candle. Now, it might come back and fulfill a direction and keep squeezing down or keep pushing down, or it might just keep squeezing up. We don't actually know. Maybe this candle is going to serve as a sticky for the support and is actually trying to gain some momentum to push up more. We don't know. Price could literally just keep going sideways like this as well and just keep sticking in between these two zones. Those are not trades either. So it's not simply candles, it's not simply candle strength, it's not simply candle patterns, it's not simply market structure, it's not simply fundamental or technical analysis. It's literally about what things are mattering to you right now. Because some days candlestick patterns matter more. Sometimes chart patterns matter more. Sometimes your candlestick strength is going to matter a lot. It just depends on the day and what's actually happening for the movement. Right now, chart patterns matter a lot because for chart patterns to get activated to bring us some volatility to push to a new price level, they have to get out of whatever boundary they're in right now. We're inside of this little box, and we've just been inside this box, and we've been inside of really a bigger box, this $2 box, for like almost 2 hours, over 2 hours. So price has really done nothing inside of these two boxes. Now, we did have a nice strong push down, but that's not a move that a swinger would have taken. So what is price doing right now? Is it moving down fast? Is it moving slow? Is it moving up fast? Is it moving up slow? Or is nothing happening? Right now, it's starting to build up a little bit of momentum, but still nothing's happening. It's very, very important that you have those definitive categories and that you decide what the categories are. Because if you don't decide what those categories are, prior and you define them, then what actually happens is when market turns around, you're like, oh my gosh, what happened? And that's not the place you want to be in. The reason you don't want to be in that place is because the market's unforgiving to you being in the wrong direction at the wrong time. It's not going to care. It's not going to say, oh, you know what? I did have two red candles. Let me just help you out real quick. No. So that's why it's boiled down. Is it moving fast? Is it moving slow? Is nothing happening? Because answering that first question is where most people lose money. See, just because you have money in your account doesn't mean you actually need to put it into the market. This is where most day traders lose money. This first step. They see a chart like this, movement like this, and they still take a trade. Like even if we go back and I don't know why my volume bars disappeared, but I'm gonna go ahead and add them back here from my favorites list of indicators, and they'll look at something like this and they're like, oh my gosh, I need to get in. They'll still take a trade, even though there's really no movement. Like, is the move already happening? It's a very strict question. Is the move already happening? Or am I trying to catch something before it starts? These are real questions you have to ask yourself. And then if you go through all these rules and you break one of them, if you say, oh, it's not moving at all, but you still enter, right? That's one of the mismatches. That's one of the misalignments. You see it, you say it's doing nothing, and then you still go place a trade. You have to say, if I break a rule, I'm done. Because now you're no longer in an execution mindset. Now, instead of being in an execution mindset, you're in a do whatever I want, gamble my money away mindset. And you can't fix mistakes with more trades. That is one of the habits that day traders have, that the execution loop is going to undo in you. There's a lot of bad habits it undoes, but that's one of them. More of the bad habits are trying to force small losses. It literally manufactures small losses for you. You're trying to be more profitable. You do that by having more consistency in your execution. But see, when you do a whole bunch of random stuff over and over and over, you think these random actions are going to get you consistent results, and they're not. Consistent results equal consistent everything else. Because execution goes first, and everything else is downhill from there. Or it's like a downflow from there, it's downstream from there. So, as you can see, now our candle has confirmed us back in a positive direction by giving us this green candle. What does that mean? Like, what does that mean? It doesn't mean much. But now, this means something. It doesn't mean guaranteed we're going to take something, but now we can actually think about it. We can start to consider it. So trades go through phases like, okay, this is what might happen. Oh, now I'm going to consider it. Okay, now I'm actually preparing to take it. Okay, now I've actually taken it. Okay, now it's time to get out. Trades go through phases. It's not just enter and exit. It goes through phases because now we're watching it, but we're still not entered. Because what did I want it to do? I wanted it to cross and hold over here, not because of the specific price, not because it's 664. I don't care about the price. I really don't. The price is just a number. Because it could be doing all of this at 564. It could be doing all of this at 444. It doesn't matter. What I care about is what is the speed and direction. Now I know and I feel the conviction, okay, yeah, this could be calls. But do I actually know alignment of my trade? No, I don't. Because price is stalling, which means there's no movement. So what you're doing wrong is you feel like, oh, well, it pushed up a little bit. That was a big candle. It touched the resistance. Oh, it's gonna push to 665, and now you just get in. Okay, cool. Go ahead. It might. But what if it doesn't? You can't guarantee what it's gonna do. You really can't. You have to reinforce waiting and stopping. This is where you're usually messing up. Sometimes it works in your favor and you leave with money, but other times, especially when you're not following the one rule and you're too heavy in your trade, this causes a lot of financial issues in your trading because now you're you're not in profit right now. But see, when we look at these volume bars, that's why I put them back up. Oh wow. This is actually the biggest candle we've had thus far, like in the past what, 5 hours? Maybe four and a half hours? Okay. I'm actually feeling a lot of volatility here. I might actually want to take it. Not me, I've already traded for the day. I'm done. But notice how most of this was just waiting. So I don't want you to convince yourself something's happening. I want you to just see that it is. A lot of trading is visual. You'll see when something's going in a specific direction. You'll see when it's breaking out. You'll see when it's going where you want it to go. And that is perfectly fine. But see, guess what? If you had seen this big candle here and you decide, oh, I'm gonna get in. Well, guess what? It turned into a resistance for over 3 hours. And regardless of how much this candle pushed up, you probably still would exit in a loss if you bought a 0 day contract or 1 day or 2 day contract. So important that you ask yourself all those questions because regardless of what happens, nothing really changed, but you want to act on it. You don't get to just act on it when nothing's changed. You don't get paid for being in the market. You only get paid when the market moves. So when you're in the market and you're supposed to be trading and you're not seeing a trade, and if it doesn't move, then there's nothing to do. But right here, this is a pretty good inclination, an indication. Okay, price is probably gonna push up to 665, if anything. Just because that's our previous resistance that I have marked. There may be other ones, but okay, it might push up somewhere close to 665. Okay. And now we just did a little bit of a skip and a hop. As you can see, price actually ended here, but skipped here. But guess what? See what's happening? Now this may not play out. It may not keep going down. But what if it does? This may not keep holding. It may not keep trailing down. This may serve as a small little stop for even more volatility even. But what if it doesn't? What we're doing is we're trying to build our patience. We're not trying to. We are building our patience through a practice that is meant to have us in profit and exit in profit. You enter in profit and exit in profit. Right? If you enter too early and you have to wait for the trade to start, right? That would have been too early because you're waiting for the trade to even gain. Right now your trade is still out of profit. It's a good inclination to keep holding it, but what if you were scalping it? Now you've turned a scalp into a holding trade. Do you see how quickly these lines get blurred? Because you've been holding this trade, hoping it goes back into profit when it hasn't done anything volatile yet. So now, boom, you see our movement come up. And it may or may not continue going cool, right? But there was so much patience involved and sifting through and filtering through that really only now you would start to actually consider getting in. And even that one candle pushing above our resistance or pushing above our previous high doesn't really mean anything unless that's part of your conviction. You're like, okay, I'm jumping in. But again, this is 8 minutes into the end of market. So should you be trading here anyways? Should you be in the market anyways? Should you be here during this volatile time anyways? So there's so many things layered on top, and that is why I have the full execution loop system, because you can run through a specific loop every single time, a loop of questions to ask yourself every single trade. And as you're trading, that'll keep you out of trades that are going to lose. Notice how most of this video was just waiting. That's the part that nobody wants to do, but it's the part that keeps your money. It's the part that keeps your account alive. If you don't trade when nothing is happening and you stop trading when you're done, you're better than most traders. Because now this candle is pushing back down. There's no guarantee it's going to keep pushing down, but there's no guarantee it's going to push back up. And that is because you do not get paid for being in the market. You only get paid when the market is moving. But you have to be in the right place, in the right direction, at the right speed, doing the right thing at the right time in order to capitalize off of the market moving. So there's a lot of times where you could be in calls and market is moving up and you still lose because something is misaligned. You might have been bored and you're not even seeing a trade, but you just get in. Or simply, there's no movement. Or there is movement, but it's not real movement. In the private training, I explain what real movement is. And you just don't want to wait and you don't want to stop. And one of the biggest things is that if you don't want to make money in the market will simply hand you tons of losses. But when you want to make money, you have to do things different. You have to have a protocol for waiting and stopping and knowing the difference between movement and no movement. I'm not even controlling the market right now. I'm just telling you the execution loop, and it's literally playing out in our faces right now. It's been playing out in our face since I started the video 47 minutes ago. I highly encourage you to go back to the beginning and watch how most of this was most of this video was just waiting. Now we have 5 minutes left in the market. And this is the part that nobody wants to do. Now, what if you were in calls? Now that it's the end of the market and your contract is, well, end of the day and your contract's probably dying, well, it could still push up, but what if it doesn't? It could still put you in a profit, but what if it doesn't? See, that's guessing and that's hoping. And right now, at this second, you would still be out of profit. And if you were trying to enter for a call, scalping, you would still be this whole time since the past 15 minutes, almost 20 minutes, be holding a trade that's no longer even a scalp. So number one, is the market moving fast or slow, or is nothing happening? That is the question most of y'all don't ask, and that's where most of you are losing money. If there's no real movement, then there is no trade. But see, the market doesn't just sit still in a linear line. It always is going to have a sort of type of movement. But it's about real movement, or is it just moving? Is it real movement that can actually pay you some money, or is it just moving? The second thing is the move I want to take, if it's moving, is it already happening? Is there a piece of it that I can take, or is it something I'm chasing? Because if you enter too early, then you're guessing. And if you enter too late, then you're chasing. The third thing is correcting your size. in the execution loop. So one ticker that you're practicing with, one size that you practice with, and one style, one trading style that you practice with. If your trade was too big right now because it hit my resistance, I'm just gonna blow it up, you would be out of profit right now. And depending on how much money you put on your trade, not only the time decay, but the more that you put on, the more loss you're in, right? A 10% loss on $1,000 is way more than 10% loss on $100. And you would have probably even been hesitating here because if you change your size because you guess something would happen, then it changes how you think. And you probably, when price hit down here at 664, you probably would have been out at a loss because you're like, oh dang, it's red, it's red. But see, what if you had your size the way you were supposed to? You would have been making different decisions or asking different questions. Shouldn't have still been in that trade if you were scalping, but you may have made a different decision if you were still swinging. So you have to ask yourself, what would I be thinking right here? Oh, let me just take this one trade because I just feel like it's about to go up. Da, da, da. Well, there's a minute and 44 seconds left in the market. This would be simply something you're holding and guessing, hoping that will win. And that is the thoughts that make the mistakes happen. So notice how most of this video was just waiting. And we really haven't even gotten a full push up to where we wanted. It's probably going to, right? But it doesn't matter if it does or if it doesn't. It matters how it actually behaves. And are we able to actually trade it? And this is the part nobody wants to talk about, or the part nobody wants to do, quite frankly, because it's the part that keeps your money. If you don't trade when nothing is happening and you stop when you're done trading, you're already better than most traders. Look at what price is doing right now with 30-ish seconds left to market. You would have had to exit in a loss because it never actually went above that previous candle anyways. So stop guessing on your volatility. Stop guessing on your price movement. If you want the full breakdown to this execution loop system that you just literally watch me give you, go watch the free private training. Watch that video first. It is linked in the description box. And then come back and use this as real-time practice. This is how everything starts to click. And with like 5 seconds left in the market now, you probably may or may not would have been at a profit. But those questions I gave you is what helps to break that unprofitability loop.